Hello traders and welcome to another video review. Today is Wednesday, December 21st, 2022. Let's find out what is going on the Forex calendar today. As you can see, I got some of the most important events scheduled for release during the New York session. So what do we have here? Core CPI. Data from Canada scheduled for release at 2:30. The previous reading was 0.4% for the month of November. So let's see whether this time the consumer price index, apparently the core consumer price index, will eventually beat the previous reading. If it is so, then there will be a little bit greater pressure on the Bank of Canada to hike the rates again. CB consumer confidence and existing home sales are scheduled for release at 4 p.m. Those data are of course from the US, and as you can see, the consumer confidence is expected to increase slightly from 100.2 to 101. And existing home sales are scheduled for release at 4 o'clock and are expected to drop from 4.43 million to 4.20 million. 4:30 we got crude oil inventories scheduled for release, and of course this is a very nice data release for all of the crude oil traders. So we will definitely take a look at the crude oil later on. So let's find out what's going on the US dollar to the Canadian dollar ahead of the core CPI data release. For our chart of the US dollar to the Canadian dollar, as you can see here, is showing us that we are deteriorating from this technical resistance. 1.3699 has been tested many times, but it has not been violated just yet. So right now the market is moving lower towards 100 periods moving average, which is located around 1.3577, and it's hovering around this level, still above it. So the outlook remains bullish for this market as long as we trade above this level. The technical support is located at 1.3518, so that's the range. The market is right now trading inside of. So because the volatility is not that bad, market moves up and down. Nevertheless, please notice the fact that this is roughly not even 200 pips range. So any breakout out of this range to the upside or to the downside might be very dynamic. The momentum is just below the level of 50, just broke below the level of 50. So right now the market participants are trying to test the level of 50 from below, and nevertheless it's easy to see that the momentum is negative. Let me just put the horizontal line here so you guys can see it. There you go. Let me just remove the magnet, and the level of 50 is around here, 49.98. I can't do better than this, so it's easy to see we are below the level of 50. So the momentum is generally negative on the US dollar to the Canadian dollar. Let's see how the core CPI data change the outlook for the Canadian dollar. Please keep an eye on the 100 days moving average on the 4-hour time frame chart. Let's find out what is going on the US dollar index. The US dollar index, as you can see on 4-hour chart, keeps moving lower. Look at this beautiful down move, and just recently this market is not able to move above the 100 days moving average, which is why again we should keep an eye on this moving average. Local highs made around the level of 104.90. This level is of course the technical resistance. The other level that is a technical support is the low from the December 14th 2022, and it's located at 103.42. so the current range is roughly 100 pips. Just a little above 100 pips, 120. So what is going on here? As you can see, we are keep moving lower. So the situation, or maybe just let me just zoom out again. The situation, it looks like that. we go slightly up, right? We go slightly up and then we continue lower. We go slightly up and we continue lower, right? Slightly up, lower, slightly up, bounce, lower, bounce, lower, bounce, lower, bounce, lower, bounce. And what's the next wave in the sequence? Go lower. So as long as we stay below this 100 periods moving average, the sequence of move down, bounce, move down, move down, bounce, move down, and so on is being continued. So we got the series of the lower highs and lower lows, which is the definition of the down trend. If we switch to daily on the US dollar index, we will still find out that the market is trading below the 100 days moving average, around the lower range of the 2 standard deviation on the Bollinger Bands as well, and into the negative territory on the RSI. So the higher time frame outlook supports the current outlook on the lower time frames. On the US dollar index, outlook remains bearish as long as the market trades below 105 points. So last but not least, let's take a look at crude oil. Crude oil daily time frame chart is obviously moving lower, right? So we got this very nice situation where the lower lows and lower highs are being made. So this is our technical resistance. As you can see, the market is trying to break above this technical resistance. Nevertheless, there wasn't any kind of daily candle close above it, and the next support is located at 70.10. So we are trading below 100 days moving average and below the key technical resistance. Let's switch to the 4-hour chart so we can see it clearly. There you go. There was some kind of a bounce, nice bounce from 70.10 to the highs of how much it is. Highs is around 77, I guess, 77.74. There you go. Nevertheless, as you can see, the market was pushed to the downside. The breakout here above the 76.44 didn't last long, and the 4-hour time frame 100 periods moving average had been tested fine, which is okay, not a problem with this. Nevertheless, we still have been denied from the higher prices, and the market of course moved lower towards 72.91. Right now we are consolidating just at the 100 periods moving average and at the level of technical resistance. So please notice the fact that we need to break higher in order to continue the bounce. Nevertheless, so far the market is not doing this. The next local technical resistance is 77.73, and eventually the next target for bulls in case of the extension of the bounce is located around 83.33, which is the high from the 1st of the December. So you can see for the most part of the December, this is like a half of the month, we went from 83.33 to 70, so that's a huge drop. Then we retrace. I think this retracement in December is around, let's say, 50%. Let me just take a look at this. This retracement might be around 50%. So that's the low of the, let's say, 70. That's the high of the 1st of the November. There you go. 50% was 76.81. We are almost approaching 61% of the last wave down movement. So we need to break at least above 78.32, which is the 61% retracement level, in order to continue the up move. Okay, so please keep an eye on these levels, because it looks like the market doesn't actually want to go to the upside. This is still kind of corrective bounce during the downtrend, because if we take a look here on a 4-hour chart or even on a daily, we can clearly see that the main trend is to the downside, and this trend will be maintained as long as 83.29 is not clearly violated and there is no daily candle close above this level. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.